Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Today's interview is for educational and entertainment purposes only. Please do not take this as investment advice. Do your own due diligence before investing in any security. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview to a very exciting story with some exciting developments. We have the CEO, Jeb Besser from Modular Medical Devices, ticker symbol MODD. Jeb, thanks for coming in, man.
Oh, thanks for having me again, Tim. It's been an interesting couple months since we last talked, so I'm looking forward to updating everyone.
I'm looking forward to it too. So you have had a couple of exciting things develop, right?
Yep. Yes.
Okay. Last time we spoke, you were in the process of planning to file for 510K.
That's right. Yes.
If I'm not mistaken.
And our guidance at the time was that we would be filing around year end. And I think in the course of our hour-and-a-half long marathon last time, I was pretty clear that there was one report, an electrical safety report, which wasn't high risk, but that was either going to fall on the side of we got it by December 15th, or it wasn't going to come in until the second week of January. Well, it came in, and we cleaned up the rest of the submission, and we filed this past Friday, January 19th. So,
which I think is fantastic, right?
Yep.
Okay. Along with the filing, prior to that, there was an announcement of was it Glooko?
Glooko, correct.
Okay. Can you shed some light?
Yeah, so we announced a partnership with Glooko. So Glooko is an interesting player in this space that you might never have heard of, probably haven't heard of. They're the dominant player in providing the upload download software for portal for the doctor and the clinical providers. So you go in with your pump and you say, and the doctor wants to be reimbursed for the visit, they pull the data off your pump and then they use that as part of their submission to the insurance company. And it spits out a nice report, sort of like the report you would get if you had a lab test for cholesterol or what have you, saying, hey, this is how you're doing and this is what it looks like. And they also have a partnership with Dexcom, so you could have this is what your pump stats are and this is what your CGM stats are on the same page if you happen to wear both. So I view this as an important partnership for a couple reasons. The first is it's another industry validator, right? Like this, we are paying them to devote engineering resources to this, but they're not going to partner with just any rank startup who walks in off the street and says, hey, I want to do a deal with Glooko. They have to believe that it's relevant to them to have us on their platform so that because they see us as having some customers once we actually get cleared. So that's point one. Point two is it eliminates a possible reason for the doctor to, or the nurse practitioner to say no to us, right? Like oh, that's great. Your pump is easier to learn and easier to teach, but I don't want to learn a new report. I don't want to have to train my nurses or my billing people on how to use your crappy proprietary software on my computers in order to submit that to the insurance company, and we'll see if it gets reimbursed. We're using something that they're 100% used to. Insulin is an investor in Glooko. So every doc who prescribes an Omnipod has Glooko in their office already. So we think that we capture an audience of the product that's the most similar to ours in terms of form factor and use, and eliminate a possible barrier to entry. And look, could we build this on our own? Sure. Would it take a lot of time and effort to roll out? Yes. And is this an area where we're going to distinguish ourselves from other companies? No, it's not. We're going to distinguish ourselves, as I said last time, on being the lowest cost, safest, just as accurate, easiest to use solution that you wear on your body. And everything else above that, we're willing to partner as much as we possibly can, because that's not our core area of expertise. Right.
And that makes sense to me. You're taking the friction out of the sale.
Yeah. So we think it's a nice announcement. They're also well penetrated overseas in the markets where pumps are used. They're actually a Swedish company, believe it or not. And so we think it's a nice step, and it also backdoor allows us to, partially integrate with Dexcom before we finish all the ACE designation work. So I think it's a nice announcement, and I think we'll have more announcements like that in the future in terms of getting integrated into this ecosystem.
Okay. What else has happened since?
So the other major development I'd say in this, if you're following the space, is last time around we talked about how Medtronic was in the process of trying to buy a company called EOFlow over in Korea. And EOFlow had a product called the EO Patch, which they introduced in this version, they introduced in 2018 or 2019, and it looks a lot like an Insulin Omnipod. In fact, it looks so much like an Insulin Omnipod that Insulet sued them for trade secret theft, patent infringement, and a trade dress theft in a court in Massachusetts. They named Medtronic as a co-defendant. They named 3 ex-Insulet employees as co-defendants, and they named Flextronics, whose Chinese division was Insulet's former manufacturing partner when they were over in China, before they brought it back to the before they brought manufacturing back to the States, as defendants. And in October, the judge granted a temporary restraining order against, which basically didn't allow Medtronic to do much more due diligence. The stock was trading with like a 30% spread on an announced cash acquisition, which sort of indicates that the market didn't think there was a very high likelihood of this happening. And then the deal finally broke in December, and Medtronic walked away.
And that was valued at somewhere around $786 million, right?
The acquisition price was $740 million. For a product that is not cleared in the United States and is off the market in Europe for, wait for it, patent infringement.
Ooh.
So, and then after the restraining order was granted, the Korean government made them pull the product in Korea too, which I was actually kind of surprised at. So, I don't, who knows what's going to happen with them, but I think Medtronic has admitted that they have a $740 million hole in their portfolio, and they haven't settled on an alternative yet. So it makes it. I want to highlight. I want to be very clear. I'm not saying that Medtronic is going to buy us.
I know that. I know that you're not saying that, but I will say this. I will say that at the time of a insulin pump approval, there hasn't been a company that has an approved insulin pump that was valued below $330 million.
That's right.
Correct?
That's true. That is correct.
Okay. So I look at this as there's there's three scenarios. You got one, your pump gets approved, and just going off historical, you got a potential for a $330 million valuation, right?
Now let's just Tim, let's just go back for a second. That $330 million, that was Insulet, and that
Okay.
was in 2009
Okay.
on 2 million in revs and negative gross margins. Just so I don't know what kind of inflation adjuster you're going to use, but just so we all have some context on that's
I'm
2009
just
dollars.
saying, base case.
I
Where's your market cap right now?
38 million when I looked a few minutes ago.
Okay, so
Basic.
you're a little off. I'm just
Yeah, no,
saying.
I think there's plenty of, as I told someone last week, there's plenty of daylight between us and $740 million.
Exactly.
Like, and honestly, the Glooko partnership and our partnership with Philips Medisize, which does 4 billion in annual turnover, and the fact that Dwayne DeSisto joined our board, former CEO of Insulet, the only human being who's ever been the CEO of a company launching a patch pump in the United States, like the industry thinks we're real. It's only Wall Street that doesn't think we're real.
Right. And maybe that's the point that I'm trying to highlight here. So,
Yeah.
I look at a couple of outcomes. Now, 330 million is for an approved pump is like the low bomb. Is for the approved pump. I want to be clear on that. For the approved pump. I think 330 million is the low bar, right? Then you have a potential high bar of 740 million.
Yep.
Right?
Yep.
I mean, that's the spread. That's pretty good.
Well, and I think look, the nice thing about our product is, and look, this isn't to say that someone, anyone can sue anyone for anything, but we don't move insulin the same way that Omnipod does. We don't look exactly like an Omnipod does. We have the button on top of the device. We have the little pigtail out the side. We're a two-part pump. They're a one-part pump. Like there are fundamental differences in the way we've approached this market. So I don't, if you were looking to acquire something in this space and the litigation that just happened made you want to run far away from anything that looked exactly like an Omnipod, but needed to be a patch pump and needed to be low cost and viable, there just aren't a lot of options in the market right now.
All right, let's talk about. So you filed. You weren't the only one to file, though.
Correct. Correct.
Okay.
Yes. There were two other companies that filed around the end of the year. There was a company in Switzerland that's based in Biel that filed. They filed on December 29th. Their product is also a two-part pump. It appears, based on their patents, to be a syringe pump. It's hard to tell from the computer renderings exactly how it works, but it looks like it, based on the IP, it's a syringe pump. And it's got some ex-Roche guys running it. And they said in their press release they're open to a trade sale. So I guess you would have to put them in the Derby, and we'll see how they do. I think there are, once again, the way we operate and the materials that we're using to pump the insulin is fundamentally different than theirs. And I don't know, we've never seen them in a trade show, so I don't know enough about them to speak with any real certainty about how integrated they are with a phone or what the other ins and outs of their product are. We just don't know enough yet.
Right.
So that's them. And then Embecta, the spinoff of Becton Dickinson, filed during the week of JP Morgan's healthcare conference for clearance. And in their press release, they cited specifically that it was a pump targeting type 2s, which is a little strange in that none of the current big three are labeled type 1 or type 2. They're labeled for the to aid in the management of diabetes. They're not labeled type 1 or type 2. So why would you restrict yourself from half the market of daily insulin requiring patients? And the answer is, I don't know. I don't know what about their product. And maybe that's just a marketing thing, and that's not we don't, the application isn't public yet, so we don't know what their predicate device is.
Okay.
There was, one scenario is, and this is not to throw shade at them, but there's this other product which I'm not going to say I make fun of, but that I definitely comment on occasionally, called the V-Go that was commercialized by a company called Valeritas, which went under after blowing $900 million of investor money. And the V-Go was a patch pump that was only for type 2s because it could only do basal. It was a mechanical spring that you filled up every day. You had to take it off your body, fill it up every day. It had an uncomfortable steel needle. It's still on the market, actually. It's owned by Mankind now. Mankind is its third owner. A company called Zealand bought it out of the liquidation and then sold it to Mankind for basically a bag of balls. And so that they have like 15,000, between 10 and 15,000 users, and it hasn't grown in a long time. And it's only a partial solution. If you require bolus insulin, you still need to stick yourself with needles on a daily basis. The reason it's labeled for type 2 only is it's a mechanical spring, so it can't tell you if it's not working.
Right.
So if you're a type 1, you could be in real danger that you could go low because if it stops working and gets occluded, you don't know it.
Right.
I regard V-Go as more of a competitor to Lantus, which is this long-acting once-a-week shot that you can take, once a day or once-a-week shot that you can take, but that for a lot of plans is kind of expensive. And it's the same market that Omnipod is targeting with their Omnipod Go, which is basal only. I am unconvinced that that's a big market, and we're not like that. We are a full-function pump.
Right.
We might be easier to use or simpler to use, but we are a full function pump. We do insulin bolus and full electronic reporting, et cetera, et cetera. So we are appropriate for type 1 and 2. And our predicate device, now that we filed, is the T-Slim.
All right. So, let's not forget the guy that invented your pump is formerly
same guy. Yes, Paul DePerna, who founded Tandem Diabetes, was employee number 1, first CEO. Got the T-Slim through the FDA. That is our predicate device. Nobody knows that application better than he does because he helped write it. Right. So I feel pretty confident that, if he feels that we are an analogous predicate to that, then I think we're going to be. But it's up to the agency to decide that.
Okay.
So yes, it's going to be an interesting time with the agency looking at 3 pumps. And remember, I think. The good news about that is this is not after many years, 12 years of not clearing a new pump platform. They cleared 3 last year. Now they're looking at another 3. And the 3 just as a reminder, the 3 they cleared last year were Beta Bionics, iLet platform, which looks like Medtronic MiniMed because it's based on the pumping technology is based on the off-patent pieces of the original MiniMed. So it's got a differentiated algorithm, but the hardware isn't terribly differentiated currently. And then there's the DECA pump done by Dean Kamen, who has been working on this since 2007. Looks kind of like a hockey puck. It does have a tube coming out of it. It's already used for infusion for a United Therapeutics, a not cheap United Therapeutics drug. So they're out there, and then Tandem got the Mobi approved, which is a durable version of it's basically a T-Slim without a screen, and it's small. Well, that's totally unfair. That's the T-Slim Sport. The Mobi is a patch pump form using a syringe pump that is, that basically. But that is a piece of durable medical equipment. So there's all the DME upfront and related stuff that makes it harder to get traction with the DME, which is why we want to be on PBM, on pharmaceutical benefit.
Right. Got it.
Okay. So that's the competitive environment, but we can't really control any of that. What we can control is we think we had an excellent submission, and it's probably worth, at this point, in terms of thinking about catalysts and valuations and so on. Let's talk about the FDA process and where we go from here.
Okay.
Because I think that, it's very different than the drug process that a lot of people are used to, where you kind of, if you get priority review or you get standard review, you go away for somewhere between 6 and 12 months, and then suddenly the FDA has sent you a fax saying, hey, it's time to talk, or this is what we think, or, it's very much, it's not just an adversarial process. It's a process that's very, very opaque to the filer for a long time. That's not the case with predicate device submissions. we're using the new FDA mandated platform that's called eStar. So the way it works with eStar is there's, each section has a field that you populate and documents that you upload to support it, and then the program, and then it gives you a green light saying, okay, that's complete. Okay, and then you hit send. and so the good news so there are a couple major advantages to that. One is there used to be something called refuse to file, where the FDA would call you back in 2 weeks and say, you didn't format this right. And you're going to have to redo that and then resubmit, and your clock is going to start over again. If you submit under eStar, there is no RTF or refuse to file. You have to, they will accept it and they will start to send you questions. The other advantage is that it basically acts as your project manager. So the cybersecurity group gets the cybersecurity section directly. There's no one taking this whole 7,000 page, and that's not a made up number. That's actually how long our submission is, if you paginated it. There's no one taking this file and saying, oh, I think this goes to this person or that person or whatever. It actually goes to the group. And then theoretically, they're going to evaluate what you're saying and start sending you back questions. The FDA wants to let you know when they've sent you the last question, because by law, they have 90 days to tell you, to give you questions. Okay, so at the end of 90 days or before that, they can say, okay, that's the last question. When they hit the last question, then their clock stops and your clock starts. You have 180 days to respond to their questions. If you don't, you can be timed out and then you have to start over again.
Okay.
180 days is a long time, but it's not a long time if you have to repeat certain kinds of tests, like biocompatibility, for instance. If you're going to do it at a good lab, that takes months. Okay, so the risk would be if we had something in their questions that required a repeat or a redo of a major test that could take a really long time. So that's how that works. However, if they don't do that, we can respond to their questions. And maybe, look, it's a 7,000 page file. There's no way that there aren't going to be questions.
Right.
Like I just want to make this really clear. Anyone that's listening to this who thinks, oh, well, there's a chance that after 90 days, they'll just say, attaboy, you're good. Zero chance, 0.000. Okay, there will be questions, there will be clarifications, et cetera, that will be required no matter what. And there'll probably be some kind of, I don't know where it's going to be, but there'll be some kind of testing, change in language, whatever. There'll be some interaction there. So their clock stops. We respond, and then their clock starts again. Then they have 30 days to send us a second set of questions. After they get us the second set of questions, we once again have months to respond to those questions, and their clock is stopped. Once we respond to that second set of questions, the FDA, it's supposed to go iterative. And iterative means back and forth dialogue with the agency on a weekly or daily basis through phone calls, emails, Zooms, whatever, in order to, quote, clear the product with the least commercial burden to the applicant. So after I get that second set of questions, you pretty much know if there's a showstopper.
Right.
Not for sure, but you have a very good idea. And as I said on the last call, I'm very upfront about the fact that, like, look, we're going to do what's best from a risk reward perspective for our shareholders. And I'm motivated that way because my fund is the largest shareholder. So, and all my comp is related to shares and doing the right thing for the shareholders. So we're going to, and given our valuation relative to valuations in the past, and given the the abortive EOFlow transaction, and when Tandem bought AMF Siggy in December 22 for 70 million upfront and 140 million in earnouts and milestones, which is also a number greater than our current valuation for a product that at that point was 4 years away from submission, according to them. I think we're obligated to our investors to explore what if there's a risk-adjusted lower risk way to monetize the asset for a good price. And so we'll hire a bank, and there are going to be two mandates, assuming that our FDA feedback is good. Mandate one is, what would a strategic pay for us when we get cleared? And mandate two, and that would be a whole or a partial acquisition, I would think. And mandate two would be, what's our cost of capital post clearance to raise $50 million through some combination of equity and, probably some kind of commercialization financing or the like to get to profitability. And which we think is, a $50 to $60 million kind of number.
Okay.
Very different than the $500 million it would take to launch one of the current products in today's environment, which would take years and years, right? Because of the way they sell.
The equipment and the facility to do the manufacturing, right?
Yeah, we already have a pilot line. It's in San Diego right now. As soon as we get that first set of questions and we're confident that there's no major redesign, we're going to have Philips Medisize move it down to their facility. Because ours isn't approved for human use. It produced all the R&D product, but remember, there's no human trial here, so they were never used on human beings.
Right. Okay.
So that's, and you don't want to be making changes to the engineering of your pilot line in an operating facility because Philips obviously makes lots of other products in that factory. So if we had to file a change order every time we wanted to change something, that would be burdensome and costly.
For you to be able to produce at scale, would that be a big undertaking?
So the line that we have right now can do, if we maxed it, it could do, 60 or 70 million, probably at okay gross margins. Because I'd be using a lot of people to try and ramp up the capacity. If I add another, we think 15 million-ish of automation, we think we can get it to something on the order of, a couple $100 million of capacity. And by the way, the stuff we have now is largely, some of the stuff we have now is custom, particularly one piece of equipment, which is just for us, which is why I can't finance it until we get cleared. But a lot, when I talk about 15 million of automation, I'm talking about things that are pretty low risk, like conveyor belts and vibratory bowls and the like. It's not hyper sophisticated equipment.
Okay.
It costs money and it takes implementation time, but this is the kind of thing where Philips Medisize has implemented something like this with a partner, hundreds of times.
Okay. So let's
and
talk.
I want to say one other thing about this, Tim, though.
Yeah.
Willing to spend money on that in advance of clearance more so than I am on a commercial organization. If we end up selling the asset, the fact that I've hired a bunch of salespeople would be a negative to the acquirer because they would have to get rid of them.
Right.
Or integrate them into the organization. However, money I spend on ability to scale up the manufacturing quickly, they might very well pay me a multiple on because I'm doing their work for them, and that's something they would want to do immediately anyway.
That makes sense. Yeah. No, that makes sense.
Good.
All right. So let's talk about where you're currently at today, and from a financial standpoint, right?
Okay.
Yeah, you have a going concern out there, which maybe freaks people out, but to me, it's not that big of a deal.
We've had just to be clear, we've had a going concern letter in our entire existence going back to 2017 with a brief, like 3 to 6 month period where we had uplisted at the NASDAQ and then we got $8 million from SIO. And so it appeared that we had about a year of cash left. And then we self-flagged ourselves and said, no, you probably should go back to the going concern letter. So yes, we do not. We have a going concern letter. Given how low our valuation was and given how high our cost of capital was relative to the comps that I use when I look at our company, we've been trying to be as tight with the capital as possible while making sure that our submission was of high quality and that we were prepared to actually launch the product ourselves and not just be a complete paper tiger.
Right.
And use the best labs and do a high quality submission. So now that we've submitted, we've got some warrants outstanding at $1.22. I think, I'm anticipating some of them have been or will be exercised. So there'll be some cash coming out of that. We have an ATM that we put in place with Leerink. I think my interview last time was before we did the ATM with Leerink. So we have a $6.5 million at the market line with Leerink. And so that's another source of capital if we have a big trading day like we did with when we traded 15 million shares in August when we announced Philips Medisize as our partner. So that's a possibility. I have availability on my shelf, so I could do a quick, I could put $3 or $4 million on the sheets that way, because I don't need that much money to get the clearance. If clearance takes 6 to 7 months, we're talking an incremental $3 to $4 million, maybe 5. And if I raise more than that, it's because I feel more comfortable with my prospects and I want to spend a little bit more money on scaling up manufacturing faster, because I think an acquirer would see value in that, and I think investors would see value in that if we launch ourselves. So, my answer to date has been, we're going to be opportunistic. It's not that much money. We're going to figure it out in the short term. And now that we've submitted, I'd say we're going to figure it out in the even shorter term. But honestly, I didn't want to put the ATM in place until we could prove, as we did in October, that we could get through the insulin stability test that was such heartburn for us in the previous year. I'm a big believer that the market will reward you when you actually deliver on what you say you're going to deliver. And now that we've submitted, I think I think everyone knows we're on the clock with the FDA. And so now it's a much clearer speculation.
Right.
I'm not just having to take my word for, and then we're going to submit, which, frankly, we were more than a year behind on.
Right. So just to make this clear, like you said, there's no human testing. There's basically 24 tests that you have to pass in order to get, and if you pass the 24 tests, you get certification, right?
Correct. Yep, that's right. You have to convince, the 24 tests are basically to show equivalence to the existing device that you're comparing yourself to. And just as a refresher, if you don't want to go back and watch the last interview, again, we say 24 tests, and people are usually, the next question out of someone's mouth usually is, well, why don't you give me a percentage on how many tests you've done? Unfortunately, I don't have to do that anymore because we've done all of them and we submitted to the FDA. But if I were to give a percentage, that would be totally misleading, because one of those tests is, will it short out if you splash it with water? It takes 10 minutes to run this test, okay? Another test is, put some units in the oven for 45 days for accelerated aging, take them out, drop them on their side from 6 feet up 30 times, and then push the button 90,000 times to make sure that works properly, and then check to see if it pumps accurately. Very different cost, series of events and timelines, but that's a test too, right? So to give a percentage would be grossly misleading.
Right. You don't have to, because
I'm not going to do that. So then the other way you could ask this question is, what do you see as, if you were to characterize, what are your biggest risks in terms of the FDA really picking it? Okay, what would those be? All right, so the 5 risks as we see them are, one, the 5 areas where they've drilled people recently in the recent past are: 1, cybersecurity. Cybersecurity standard changed in July of 22, June or July of 22. We've got some excellent consultants who have worked with us on that, who used to be at the FDA. So we feel very good about our cybersecurity threat testing. So that's cybersecurity. 2, biocompatibility. Major problem area for medical devices in the last couple of years. The FDA's standard on that has changed a lot. We think, the highest quality lab in the United States. We had some great biocompatibility people working with us. And, the reason we highlighted that in our October press releases, we feel very good about our biocompatibility data, which is good because to redo those tests takes a long time and is very expensive and very specific in terms of the knowledge. Insulin stability. Obviously, that was the problem we had in the fall of 22. We feel very good about our results there, having redone them with the new production version, and having what we thought we'd identified the problem at the end of 22, and I think the testing bears out that we did in fact identify the problem correctly. Accuracy. Does the pump as accurately as its peers? And without belaboring the games that people can play with exactly how accurate one pump is versus another, and I don't want to leave the impression that current pumps aren't accurate enough, because they are, because they've been on the market for a long time and they provide better care, and they are the most likely source of inaccuracy, frankly, isn't the pump, it's the human being operating the pump, right? Like if you we're talking nanoliter margin of error here. So our pump is very, very accurate. It's as accurate as the other pumps on the market. It might even be more accurate. But do I think that we want it? But would I differentiate us from them on that basis? No, because the FDA is going to say this is accurate enough. And then a doctor, if you go in and talk to an endocrinologist about the most likely area of inaccuracy, and you say, is it the margin of error when the pump pulses? Is it how hard they depressed the plunger when they filled up the pump every 3 days? Because if you push that plunger too hard, you can end up with an insulin stability number like where 20 or 25% of the insulin molecules were wrecked because you pushed the plunger too hard. It's that fragile. And there are thousands of people walking around every day with pumps on who have done that. And they're okay.
Right.
I'm not saying it's ideal, but they're okay. Or is the most likely area of inaccuracy, you picked up the menu and you didn't check your CGM or you're not wearing one, and you guessed how many carbs are in that spaghetti carbonara you're about to eat. I'm going to go with 3,
Right.
then 2, then 1.
Right.
That doesn't mean that accuracy isn't important. It's just I don't think, if you know this market, I don't think it's as big a differentiator as people think. But anyway, accuracy is important for the FDA, and we think our pump is very accurate. Okay. We're not, and I say this over and over again, but I'm going to say it again. Just unlike the Freestyle Libre when it launched, because that's my favorite analogy of how likely it is that there are these almost pumpers out there, just like there were people who were almost wearers of glucose monitors, right? And then they adopted because the Libre was easy, cheap, etc. We're not asking you to sacrifice accuracy for simplicity. We're just as accurate as the other pumps, in our opinion.
Got it.
We'll see if the FDA agrees with that. So and then the final area is human factors. Can people understand the instructions and can I use the product? And on the one hand, I think we have a leg up there because our product just is much simpler and has fewer options than the other products. On the other hand, you always have individual variability when you do human factors testing where someone's fumbling with the device on a given day, or I view it as almost inevitable that they'll ask us to check some portion of human factors just because that's just the nature of the beast.
Right.
However, to fix a human, if the question is, well, it seemed like this kind of people didn't understand the booklet as well, retest 10 of them, then you go and you recruit 10 more people and you give them the booklet and say, what would you do with it? Right. That's not the same kind of time and expense burden as, dissolving your cartridge in 3 different solvents and chromatographically characterizing all the leachables that come out of them, and then injecting the slurry into 28 unfortunate rabbits and making sure they're alive after 30 days.
Right. All right. So I get that. I see where we have potential. I mean, there's going to be questions. There's no doubt about that. I think the crucial ones, we'll just see. I mean, look, you never know. We'll just see how it plays out, right?
Yeah, I mean, look, the average clearance time in this division right now for a 510K predicate device is 160 days. Okay. That's just a fact.
Right.
Does that fact mean anything for us when there are products in this category that range anywhere from like a neurostim implant that would sit on your brain to a drill bit that has a different kind of metal in it? I don't know if the average really means that much, right? Like this is,
right.
If you like special situations, every time you touch the FDA, it's a special situation.
Okay. Now, I mean, this is the pump. I've had the pump up on the screen the whole time.
Yeah. Well, hold on. Since we're on video, it's always worth me pulling it out and actually holding it up so people can see it. And there's a video on our investor tab of a woman using it too, which is useful for you to see perspective and how easy it is to actually put on.
Okay.
So just as a reminder, this is our reusable. This lasts 90 days, and then we send you a new one for free. And then this is the consumable that we actually bill insurance for, and this lasts for 3 days. And everything you need. And once you put these 2 things together, that's everything and then you put the insulin inside before you put it on you. That's everything you need to have a pump. It's a major difference between us and the other products. There's no 48 inches of tubing here. There's nothing sitting on your belt or in your pocket. There's no AA batteries to change. There's nothing to charge at night. There's no second cell phone that you have to keep track of. There's nothing. If you want to go completely cell phone free and just use the button, with our product, you can. And you can still have a completely electronic bolus basal pump that's as accurate as the other pumps.
That's awesome. It's awesome. All right, so let's talk about what since we had our first interview, you've had some nice activity in the stocks. The chart looks very different today than it did when you and I first met.
I appreciate that because you know, if the chart is the scorecard on how I'm doing, when we first talked a couple months ago, that was I'm not going to say embarrassing, it was just sobering.
Well, you know, look, you have what I call a really attractive technical setup, and I'll explain why I believe that. So you have basically a saucer formation here, right? If you look at this thing, a saucer formation, and then you've got the handle that's being developed right here.
Yep.
What makes that even more bullish looking for me, well, there's a couple of things. If you back out on the chart, and I got to do that over here. Okay, so if you back out, you can clearly see that this was in a downtrend for a while. It doesn't take a rocket scientist to be able to see that trend.
Yep.
Now, what's beautiful about this is that trend has been broken. So when you break that long-term trend, of all the trends to break, that is the one that is the most powerful, because it is potentially an indication of you're starting a new formation of a new long-term trend, which would be in the opposite direction. So if we were going from the upper left to the lower right, now we're looking at potentially going from the lower left to the upper right.
Mm-hmm.
And you have those catalysts potentially, fundamentally, right there in front of you, right? So you just had this massive volume day. And that was, I think that was your biggest volume day ever, right? It was.
You're talking the August 15 million share day around the Philips Metasize announcement.
Yep.
Yep.
So now you got the saucer formation, and that's, you know, I guess maybe this 225 to 250 area, let's call that the resistance area. Once you break through that, I think that then becomes the floor, and you are in now what's a stair step formation higher. And the other thing that's beautiful about this is you just had the 50-day cross above the 200-day, which is called the golden cross. So you have the golden cross, you have a long-term trend break, you have a saucer and handle formation. The chart looks extremely attractive. Mm-hmm. Okay. And then if you file for the 510K clearance in the next 100 and whatever days, you should have some questions that start coming, and things will just develop from there.
Yep.
But there's also other things that you could be doing right now, Jeb, between now and then, right? That I like you said, the glucose announcement, the Glooko announcement was one thing. There are other things that you can work on between now and then.
Well, I think one thing that we specifically alluded to in the press release is, now that our regulatory people are waiting for questions, we're going to turn them to filing for clearance in the UK.
Right.
Because I think we talked about this in our last conversation, but we think there's a big opportunity in the UK, because in the UK there is a mandate that every pediatric type 1 should be on a pump. That's the law of the land. But they've standardized on Medtronic, which means, given that the NHS decided they were only going to spend $50 million a year on this, they can only afford to do 1 out of every 3 kids. So 2 out of every 3 kids, their parents know that they're getting substandard care, and they lost the lottery. You can imagine how popular that is.
Right.
So we think there's an opportunity there to get cleared in the UK and do an equivalency study, and then see if we could have a piece or all of that business. Because given our much lower costs, we think, since the NHS would distribute the product for us, you wouldn't need a sales force. You'd be selling basically to a single customer. And that's a totally different model where even if our gross margin was lower, our net margin might be higher. Certainly
Got it.
this. That's a nice little bit of found business. I mean, you might ask, well, why didn't you go for the European clearance first? And the answer is, you go for the European clearance first, everybody asks you, well, how come you're not cleared in the US? Because that's kind of the gold standard.
Right.
Because a lot of people don't realize this nuance, but you get the CE mark in Europe, and there are two kinds of CE marks. There's one for a medical device, and then there's one for a toy, like a Fitbit, where it says this is for recreational use and for your information, but don't you dare dose yourself off this.
Right.
So I think that would not have made sense. I think it made sense to go to the US first, and then and the reason that we're a little behind on the UK is that because of Brexit, it wasn't even clear until a couple months ago who the trusted entities were that were going to do the review on our product. But now we're making progress on that. So we think that's the next focus of our regulatory people when they're not answering questions.
All right. So how can I put potential investors' minds at ease about the capital markets and
well,
the raising
going concern question and gee, are you going to have enough money to land the plane?
Right.
And I'm going to answer this in much the same way that I've been answering this for the last few months, which is, look, I mean, you're not getting a guy who's run a 200-person sales force with me as CEO, but you are getting someone who's been a fund manager for, this is going to be a sad answer, for 25 years. And so, and as the largest investor, I don't want to do a terrible deal when I'm on the goal line of accomplishing our goal here. So I'm not going to tell you that we're going to write a check, but I do feel like we're going to be selective and opportunistic with our access to capital. And now, thanks to the deal we did in May, we have access to a shelf, so we could do some kind of small registered direct to get us there. We might be getting, as the stock stays up above 122, the longer it stays up there, the more likely it is that some of those warrants come out and extend our funding. And I consider those to be virtual stock. If I can't make money for 5 years and someone who owns stock at $1.22, what am I even doing here? And then we've got the ATM, where if we had another day like we did with Philips Medisize, the extra money we would need to get us over the goal line would be a fairly small percentage of a big volume day like that. But you can't count on that, right? So all of those things, what percentage I weight of each of those things. I mean, the thing that I have the most control over is, could we go out and do a small, couple-handed RD? And the answer is maybe we might do that. I'm gonna see now that we're submitted, we're gonna see where we fall in that. But the appreciation of the stock has helped in the sense that we have a $38 million basic cap. If I do a deal in common, it's probably not going to be more than 10 or 15% diluted, right? As long as I don't end up with a 200% warrant crowd. And I can tell you, as the largest shareholder, I ain't doing that. When we were in a much worse position earlier last year, we still only gave out 50% warrant coverage.
Right.
So the answer is, I'm not being evasive. I can't tell you exactly how I'm going to solve it. I'm just going to tell you it's going to be a combination of 3 levers.
Got it.
ATM, warrant exercises, and or overnight registered direct, or some combination thereof.
Got it. All right.
And just remember, your exposure here in terms of us, getting through sometime late in Q3 is only, $4 or $5 million.
Right.
I'm not going to say that's nothing, but it's not 20.
Right. How many shares fully diluted outstanding?
Let's see. So as of last report, we were at 21 million and change. There's a cap table in our presentation that's up to date as of December.
Okay.
I would suggest you just go there.
Actually, I have that. I just had it.
Yeah.
Hold on.
You can just put it up on the screen.
I'm on it right now. So
financial snapshot.
Yeah. That's probably at the bottom.
Yeah. Pretty close to the bottom. Yes. I've seen this before. Okay, keep going.
Yeah.
Yeah, keep going. UK, industry validation, capital structure. There you go.
Got it. Okay, so we got 21.1 million shares outstanding.
Yep.
You got executive insider ownership is at 26%. You got warrants, 1.3, and then you got other warrants,
1.3 million pre-funded penny warrants owned by SIO Capital, which are I consider to be virtual stock.
Okay.
Yep. You got
1.3 at 122, 132 strike price. And then you got warrants 6.2 million with 6 to 660 price strike price.
That's right. That's right. And so the 5.1 million, I'd say the most important series there is the 5.1 million warrants at $1.22.
Okay.
If you're buying the stock right now and you're worried about the overhang from the 660 warrants, I would say that's a high class problem to have.
Right.
If those suddenly start to be in play.
Okay. All right. So look, look, what do we got here? We got 21, 36, about 32 million shares outstanding.
Yep.
Right around there. So that's still for the kind of company that you are, and I think that's nothing, right? I mean, to me, that's nothing. Anything under 100 million shares is what I would call low.
Look, we're very sensitive to dilution, and we're sensitive to getting a good return for our shareholders. And issuing lots and lots of shares isn't the right way to accomplish that. So, but at the same time, when there's something that's clearly important in terms of the strategy for the business, we'll go out and get the right the amount of capital.
Right. So anyway, I would be watching. Look, I'm not telling anybody to buy the stock. That's not what I do. I think you should take a look at the story, listen to what Jeb has to say. Smart guy. He's not going to go out and do a dumb financing. It's technically, it looks like it has found a new direction, and there are catalysts that are out there that could very well make this thing pop through that resistance at 225, and then from there. Who knows? Let me take a look and see where that next resistance spot might be.
I think one thing I will say about the capital structure is there's nothing between those $1.22 warrants and those $6.60 warrants that would actually be what I would call overhang.
Right.
Okay.
Right. So you've got a little bit of resistance, probably right around $3 mark, which round numbers are always like that, right?
Yeah. Well, that's also where the stock traded immediately after the uplist cratered before I was CEO.
Okay, gotcha. So there's a little bit of resistance there, but where you have a really clear line that I can see where you might have a good amount of resistance is right around the 380 to $4 mark, right? Because that acted actually as a floor for a while.
Mm-hmm.
1, 2, 3, about 6-7 months it acted as support, and then it finally cracked. When that cracked, so that's where I think you'll have a good amount of resistance. But from where it's currently sitting, that's a nice little clip right there, right?
Yep, that's right.
So I think the risk reward is extremely favorable. Congratulations on getting the 510K submitted, and as things develop, you feel as though we missed anything here?
No, I think this has been pretty comprehensive. I mean, the first time we talked, it was an hour and a half, and I've done better than that in terms of time efficiency. So yeah, I feel like it's covered everything. Everything that you would want to know.
So as things develop, anything you see that's significant, we'll have you back, and we'll just do a quick update. Sound good?
Sounds good. Thank you, Tim.
All right, Jeb. Thanks for coming in, man. Good, and keep executing. Keep executing. You're doing a great job.
All right. Thanks.
Thank you for tuning in for the follow-up interview with Modular Medical Devices CEO Jeb Besser, ticker symbol MODD. I hope you enjoyed today's interview. And if you did, please do us a favor. Give us a like. How about giving us a share? And do not forget to smash that subscribe button. All of those things are significantly important for us here at Alpha Wolf Trading, and it will help us bring more content like this. Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.